Welcome back to the Dividend Diplomats YouTube channel. Guys, you've got Bert the Herd and Lanny, your favorite DD guys. And today it's about these 5 foundation stocks to grow your passive income. And where are they right now?
Smash that subscribe button, everyone. Give this video a thumbs up. Holler at your boys, the Dividend Diplomats. We just crossed 21,000. We are on the journey to 22,000. So let's go. Let's get there quickly, everybody. Do you think we can get there, Lanny, by the end of August?
We can try our asses off to get to financial freedom, guys.
Let's go.
Bert and I have been investing for over 15 years. Let's just round that out respectively. And we've always talked about foundation stocks to help build your dividend portfolio, your stock portfolio. This is a great video for beginner investors, for all investors that are just trying to really focus in on a handful of stocks. We feel like these are like the foundation like you have on your house, but for your stock portfolio, guys. So we're going to go through those 5 foundation stocks. We're going to go one by one, and we're going to see what they've been up to, if there are stocks to buy right now, and are they still strong foundation stocks to juice that passive income for your stock portfolio.
We're going to run each one of them through the DD stock screener, which focuses on that price to earnings ratio less than the S&P 500, payout ratio less than 60%, history of increasing those dividends, and then that bonus metric here, the dividend yield.
Exactly, guys. Exactly. So we're going to jump right in to that first stock. If you watched Saturday's video, guys, we're talking about the good old reliable, the king of kings, as sometimes we like to call it. Yes, you know, Triple H, we're taking that slogan. Johnson & Johnson, ticker symbol is J&J. And man, oh man, Bert, it's a foundation stock, and I think it's still a foundation stock for very good reason.
All right, let's check out and see how those metrics look for them. Johnson & Johnson's price is 157.69, earnings 10.63. That's a price earnings ratio of 14.83.
Wow. And then again, to slide in the dividend payout ratio, which is again the safety to the dividend. Can they pay it? Can they continue to grow it? It's at 49% for J&J on that $1.30 per share per quarter dividend.
5-year growth rate's 5.74%. They're king. They've increased for 62 years.
Boom. You'll find a theme here. To make it a foundational dividend growth stock, you need to have been a dividend aristocrat, in our opinion, guys. And you'll find out not only are they dividend aristocrats, but they all almost might be dividend kings. J&J, the first one here, is a dividend king, guys. Now, the beauty to this portfolio, to the foundation stocks, are the yields. You're not going to get 1% yields. You're not going to get 9% yields. J&J gives you a 3.3% yield to go with a 5.74% growth rate.
Performance-wise, up 9.49% year to date, up 5.53% over the last 52 weeks, and up 10.76% over the last 5 years.
Not the strongest in the performance department, but if you again caught yesterday's video, this stock could be ready to pop. All right, so that was the first stock, guys. To get into that second foundational stock, we are going to go to the one where you probably have their products all throughout your house, guys, whether that's in your, I don't know, bathroom cabinet. I know for sure I've got a few. Talk about Crest toothpaste, guys, even Crest mouthwash, even the floss, guys. I'm pretty sure I got all 3.
Yeah, and in the laundry room, you have that Tide, you have some of their other products to go along with it. We're talking about Procter and Gamble, ticker symbol PG, everyone.
Exactly. This stock has been a very interesting performer as of late, more specifically in the dividend growth front. But we'll see why it's a foundational stock here. Trading at 158.49 with earnings projection of 678, a 23 price to earnings ratio. So slightly on that pricing of kind of higher, where I don't like to see them.
Annual dividends $4.23. It's a payout ratio of 62%.
Oof.
So just a hair above our 60% threshold, but not by much.
Not by much, no. I would still think it's relatively safe there, guys. 68 years of growing dividends, guys. Again, the second dividend king on this list. Wow. But Bert, what growth rate have they been doing it at?
5 year growth rate's at 6.73%. So mid single digits is not terrible for Procter and Gamble.
Fantastic. I mean, that is awesome. J&J's was 574,
Yeah.
PG's was 673, and PG has been surprising all investors lately in this department, which I think already solidifies them why they are still at foundational stock because
Yeah.
maybe J&J's this year was just under 5%, but PG's I'm pretty sure was either at or closer to 10% this year. So you're gonna get a nice balancing act here with these stocks on this list.
Yeah, and I completely forgot about that when we were asking me about that a few days ago. I'm pulling it up now on Seeking Alpha just to see that dividend news. It was a solid dividend increase. So yeah, I mean, it just wasn't expected from a consumer staple company that's going to be impacted here by tariffs and some of increased costs and tightening consumer spending.
Yep. When you think about PG, you don't really think of performance. They're actually down 4.5% this year, down
Hmm.
5% last year, and only up 28% now. I think some of those stronger years are starting to fall off. So,
Yeah.
but almost 3x what J&J has done over the last 5 years.
Yeah, and that's the important thing to remember is the performance hasn't been there. The price to earnings ratio 23 looks high for Procter and Gamble, but relative to where they always are, that's on the cheaper side for a Procter Gamble historical, and it's below the S&P 500, which is what we're really looking for in our stock screener. We're not always looking the cheapest, and quite frankly, these foundational stocks aren't going to be cheapest because they are the quality dividend stocks.
Exactly. So 372 billion in market cap, pretty much neck and neck with J&J guys. Let's slide into that dividend foundational stock. Number 3, Con Ed, Consolidated Edison, heading into the utility industry. Man, they've had one hell of a year with Con Ed, but they're trading at 101.07. PE is at 18 based on $5.63 earnings.
Dividend is $3.40 at the payout ratio of 60.39%.
Safe dividend at the top of our perfect payout ratio, a very modest PE of 18. What about dividend growth? Well, they are also now a dividend
Dun,
king,
da, da,
guys.
da, 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 dun, 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 dun.
Let's
Let's
go.
go.
Give it up to Con Ed. We own some in my wife's account. Bert, do you got? I think you
I
own
have
eight.
some.
You own both, yeah.
I have them all. I have, yeah, not to spoil it, I say I have all the foundation stocks in my portfolio.
Damn right. Now
Keith
their
Jackson's
average,
baby.
yeah, their only average growth rate's 2.22%. Again, not a high growth industry, so you're going to get that modest dividend growth.
Okay. I mean, let's look at the yield. 3.36%. Just eking out Johnson and Johnson so far, the highest of the foundation stocks that we have talked through on today's video.
That's right. So they're up 13.5% this year, definitely outpacing the overall S&P 500. Guys, watch out now for Con Ed. Move over Tesla and Nvidia. We've got Con Ed coming through. Yeah, but only up 39.5% in the last 5 years. But hey, the best one so far of the last 5 years.
So that was three. Again, Johnson and Johnson, Procter and Gamble, Consolidated Edison. Number four, Pepsi, ticker symbol PEP.
Wow, it is on this list. They made this list after we kicked AT&T off this list. This has been one of the value plays here in 2025. In fact, you were able to get it below 130 about 1 week ago.
Yeah.
Again, we're filming this July 10th, but they are trading at now 136.08. Earnings is just under 8 with a PE of just about 17 times earnings.
All right, 17 times earnings for Pepsi. That dividend is $5.69. That's a payout ratio of 72%.
Bert and I have always joked with it. With that payout ratio, you might get a little alarmed. But, this is very common in their industry. Coca-Cola has had a similar high payout ratio, but they've been able to manage that. They have been able to manage, keep going, keep increasing that dividend. They're also a dividend king at 52 years, guys, and doing it at an average rate of 7.8%, which is fantastic.
Yeah, 7.8% is fantastic indeed. That yield, since the price is down 9% this year, Lanny, that yield is over 4%
Yeah,
for
you've
Pets.
got a 4.18% to go with an almost 8% dividend growth rate. So far, they have the best yield and the best dividend growth here on the board.
Yeah, that is excellent. So again, I know I said they're down 9% year to date, down 16% over the last 52 weeks, and they are still with that gain this week, bringing them up from above 130 into 136. They are now up over the last 5 years versus being flat or down.
Number five, guys, to round out the list of the five foundation stocks to build that passive income producing portfolio, guys. The Golden Arches, McDonald's coming in here at number five. Again, they may be last on this list, but they may be number one in yours and many other hearts here.
Definitely my
290.
daughters, because they love nothing more than a trip to McDonald's.
Nice. Or do they get the chicken nuggets or the hamburger?
It's a game time decision for them. It's a game time decision which Happy Meal they're going with.
That is awesome. Trading at 298.39. Oh, and I just found out if you take the survey on the receipt, you get a buy one get one on your next time.
There you go. To get that, download the app, and you can really stack some rewards and deals for McDonald's.
Exactly. So 298.39 price with a 12.27 earnings. That's a 24
Okay.
price to earnings ratio. So very similar to PG.
Okay. Dividend is $7.08. That's a payout ratio of 58% for
Wow.
Mickey D's, baby.
Beautiful payout ratio, just under the ceiling on the perfect payout ratio. And they are just 2 years shy of being a dividend king, guys, at 48 years of growing dividend income. That growth rate on the dividend is 8.32%. Wow.
Ooh, okay, 8.32% for the almost king. That yield is 2.37% for McDonald's.
So here we go, guys. They are now up 2% this year, up 19% since last year. And they are the best on the list in the last 5 years, up
Ooh,
61.40%.
okay. All right, they have taken over, Lanny, as the top performer of the foundation stocks over the last 5 years with McDonald's. Fantastic.
One thing I want to say is if you invested equally amongst them all, you'd have an average dividend yield of 3.18%. You'd have a 3.18% with an average dividend growth rate of 6.17%. So you actually have a factor over 9% with these
Wow.
five stocks, guys.
Unbelievable right there. So, yeah, you've seen some solid performance, still a solid dividend growth from these five foundation stocks. And
Five different industries.
yes, you're very well diversified, you're very well balanced. 50 years from now, you'll feel good about the foundation that you've built with these companies.
Guys, let us know. Are these any of your top five foundation stocks for your stock portfolio, your dividend income portfolio, or just plain assets to pay you some passive income? Let us know if you own any or all of these five stocks.
Smash that subscribe button, everybody. Give this video a thumbs up, and remember, you are either with us or you're against us, Jack.
That was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.